All right, everybody. How we doing out there? Doc and Mav with you for Ready, Set, Crypto. Live today, January 5th, 2022. And we have some price action moving as well, too. We have a little bit of fear, uncertainty, and doubt, a little bit of FUD going on in the markets today. Tell you what, say hi, everybody. Hello, give us a thumbs up. Get the algorithm working for YouTube so people know that we're on. Let us know where you're coming in from. We'll get started here in a couple of minutes. Let us know where you're coming in from today. And welcome aboard.
See how everyone's doing out there. Got a little bit of market action here, but this time we can say that it wasn't us. We didn't crash the market with our stream.
Yeah, usually we take down Coinbase. We are the Coinbase crashers, but not today. So we have Amsterdam coming in from Steph. We have Arian coming in from Ireland. Hope I pronounced that right. We have RJZ the second coming in from New York City. All right. Hey, Kenneth, a long time no see. Thanks for checking in today. Let's see. Who else we got here? We got Melbourne, Australia. We have Sacramento, Belgium, Brooklyn, New York, Netherlands. I hate to see it. I'm going to get in trouble for this, but I'm happy for the Netherlands and your Formula One win. Everybody in England is going to hate my guts now. All right. We have Bay Area coming in. Netherlands again. Howdy ho, Boston. Welcome aboard, everybody. I'm glad you're with us today. We'll go over some things. Mav's got some words of wisdom for you. I will do what I do and hit the charts up here shortly. I'm going to go over the top two. So Ethereum and Bitcoin will go over the top two and kind of talk about what I've been talking about with our elite members and Omdia members for the last, I don't know, a couple of months now, it seems, since the prices hit all-time highs. And we'll take your questions, any coins that you want us to look at. But quite honestly, it doesn't really matter what any of the altcoins are doing right now because it's all about the top two. Once the top two determine a path, everything is going to get dragged in its vortex.
Right.
All right. Welcome aboard,
Awesome.
everybody. Thanks for checking in. I appreciate you guys checking in and hitting the thumbs up button. What the heck is going on? This is what happens. Price does what it's going to do. We can't really change it. And quite honestly, if you want the price to go higher, it's got to go lower first. A lot of people don't understand this. That market sentiment, like everybody thinks the market can go up every single day, and the more bulls that we get, the better it's going to go. But honestly, you want the bears involved. You want the bears to get overconfident right now, so that we can create a short squeeze. All right, Mav, what you got, man?
So, yeah, we are...
Crash and burn, Mav.
Well, of course, yeah. That's what we're seeing right now. If you haven't taken a look at the markets, in a very recent sense, we have seen a very, immediate downturn after the Fed rate hikes were announced. So we're going to go into what that means, why it's crashing the market, and why you're not seeing us sweat. Because this is something that we've been kind of anticipating for a while now, especially in the last couple months of 2021, leading into 2022. We just saw a material shift in the macro landscape away from this kind of accommodative, do whatever it takes rhetoric that has characterized the last 2 years. This whole sense of like, oh, let's just print money and make the problem go away. Now policymakers are finding themselves kind of behind the curve as inflationary pressure continues to pressured these central banks, these major central banks, to hike rates sooner than they initially anticipated. So if you're not into economic jargon, what does that actually mean? What does that mean for crypto native traders? What does that mean for us in this immediate sense? Well, for the last couple months, especially the last month or so, we've seen pretty similar conditions as to what we saw over the summer, where basically as things kind of start to trend towards, hey, we're going to see more of these rate hikes, and more and more we're going to see inflation play into the larger macro landscape. Now they're anticipating doing 3 rate hikes this year versus the 1. Things like this, where there's starting to be uncertainty in the market, things are changing in a fundamental sense, and people are reacting to that uncertainty. That's what markets react to, is uncertainty. It's not bad news. It's not, things that we can price in. It's when things are uncertain. That's when the market acts like it's doing right now. So basically what this means for us is that, yeah, as Doc said, we've watched basically a forest fire come through the Bitcoin market in a very immediate sense. And to me, this is a perfect opportunity to start thinking about, where is Bitcoin going to play into the macro in 2022, as we're going to see interest rate hikes and inflation become more of the things that we're talking about. Obviously there's still other news events to follow, like COVID and all this nonsense, but like at the heart of what's driving the market in 2022 is really the battle between inflation and deflation, where we can position deflationary, these sort of speculative assets against the norm, where things are starting to fundamentally shift. So I think this is our chance to kind of look at this and say, all right, is there any sell side pressure that's going to push Bitcoin under 40K, for example? Maybe there is. I think that's something we're going to continue to see. But at the same time, what is it going to take for us to start seeing Bitcoin price higher? It's when people stop acting in interest of uncertainty and start saying that, yeah, actually, in this macro environment where inflation is, we're not going to see interest rate hikes, despite the ability to do so. It's not going to reverse the trend. Inflation is part of this new normal that we're a part of, and people are going to be looking for sort of safe havens, some of these inflation hedge assets that are going to continue to play more and more of an important role in this new macro environment. So all of this to say is that right now what we're seeing is, the big whales, the long holders are not concerned with the, way things are changing, and you should emulate some of that. I think there's every reason to be pricing in that we're going to see more and more of this sort of uncertain macro environment where equities, stocks, cryptos, we're just going to continue to see this volatility. But in the overall long term, especially when we price out 5-10 years in advance, this is where I think things are going to gravitate towards, things like deflationary assets, things like, technology, innovation focused speculative assets that are part of this new, digital decentralized world that we're moving towards. So all that's to say is that let's look at the immediate term charting sort of perspective. Doc, I think that's where I'll turn things over to you, because what are these big red candles telling us? Is there more pain to come, or are we seeing the bleeding sort of stop for right now?
Well, what I tell everybody every week is I don't know what the future holds. I don't know what's going to happen tomorrow or the day after, or, by the end of this year. I mean, there's so much of this prognostication that's out there that's quite honestly just a waste of time. What it comes down to, though, this is the difference, is that what you've got to do is, since you don't know what the future is going to be, and nobody does, as long as you accept that, then what's important is what you will do depending on what the price does. That's really what the importance is. Let me give you guys an example of what this is all about. Let's run over to the chart. Now, this is my North Star. This is Bitcoin on Bitstamp. So this goes all the way back to 2011. So this has got over 10 years of data on this thing. And that's a pretty healthy trend. And what we have here is we have a log scale on the vertical here. So the y-axis has got a log scale on the price. And what that does is that this normalizes these incredible runs that we've had, these incredible runs. It normalizes them. in a logarithmic format. And so what this does is this allows me to understand, it takes away the FUD. It takes away the FUD. We had to go through this summer when the price dropped from, 63, 64, all the way down to just below 30, about 28. That was a hell of a move, but we went on and printed higher highs. So we're going through the same thing again that we went through last summer. So what I'm looking for here is I'm looking for polarity. So what we have here is higher highs, higher lows. Now we had a lower high and a higher low here, and what that forms is a consolidation. Just like back here, range expansion, range contraction, range expansion, range contraction, range expansion, and we're going into a smaller range contraction zone. So this can drop all the way down to 28 and still stay in this zone. Now, even if it doesn't drop to 28, even if it drops further than that, so if it drops further than that, then this is what's called a swing test, which is, by the way, that's 20,000. So what I'm telling people is be ready with different buy programs in here, depending on what levels. So now let's go into smaller time frames. Let's go over to a different chart here on Coinbase, and I'm going to go straight down to, let's go to the weekly chart. What we're seeing on the weekly chart is actually a head with shoulders pattern. This is kind of a truncated right shoulder. I don't like it very much. Normally it's a little bit higher than this to pull in more of the bulls that get wrecked on the downside, and that creates a better pattern. So this to me means that we're probably not going to get the downside that some would hope that we are. Now the forward measured move on this is basically what we're doing is we're measuring from the neckline up to the head, and then we extrapolate that to the downside. Oops, we've got to take the log scale off. Now it makes more sense. So this is going to perhaps bring us back down to that 20,000 level if this plays out. I don't know if it's going to play out or not. There's a certain percentage that's aligned with this. Normally you want to see a strong break below there. My sense is that we'll probably waffle along this level between 40 to 42,000 for quite some time before this does break. But so objectively speaking, this is a bearish chart pattern, but it's still an uptrend. It's still an uptrend on the weekly chart with higher highs and higher lows. So I'm not here predicting what's going on. All I'm doing is simply relaying, hey, there's a bearish pattern out there. This could have a measured move to the downside. So what I'm saying to people is, I think if it does release down to 20,000, I think it's going to be a hellacious buying opportunity down there. I think there's going to be so much demand down in this area if it does occur. And all the shorts are going to get in way too late. They're going to get in way down here. So everybody's going to get bearish. What you're going to see is Google Trends show up on how do I short Bitcoin with a price down at 20,000. They're too late. You're almost too late right now to short this thing, right? So what's going to happen is you're going to get everybody down in this area just completely negative and completely, this is what happens. And what will happen is institutional support will come along. And yes, oh, by the way, they are our friends. Whales are our friends. We are just merely the little fish that swim along the side of them and pick the scales off. And this is what's going to cause that short squeeze. So if I were you, what I would be looking to do is perhaps scaling in, whether it's at 40, perhaps down here at 30 as well too, and keep your powder dry to have some cash on hand down here to buy around 20. So learn to scale in on these levels. I would say 40, 30, and 20 would be your scale in points. Okay. Okay, so everybody's out there. Everybody wants to predict and play Merlin and say that we're going to go down to 10 or 0 or whatever. I'm not doing that, guys. I'm not here to tell you what's going to happen in the future. All I'm saying is what you need to do is to plan based on what the price does. Have those forward actions set up in advance of the price and then just mechanically follow them. You'll make your best decisions when you're not stressed about them and you're just following a plan. All right, let's go over to number 2 here. Let's go to Ethereum. Ethereum is actually in much better shape technically. This is just a falling wedge pattern on the weekly chart, which is actually really sort of a form of bull flag, and the price is still above the 200-day moving average on the daily. These are just little bear flag patterns that are setting up along the way. This is very gentle. This is very gradual price action. So what you want to do is you want to wait for either you can scale in at the bottom of these, scale in at the bottom of this pattern all the way down here and add to your position, or you can simply wait for this thing to break. Technically, this is in much better shape than Bitcoin is. Technically much better shape than Bitcoin. And if we go out to the weekly chart as well too, we can see that this, we can draw fibs on here and do those kind of things. I mean, there's all kinds of analysis techniques that we can play on this. But, at the end of the day, we just don't know what's going to happen next. It's still well above the 50% fib and well above that 61.8% fib that normally marks a delineation point of bullish and bearish. So in other words, if the price gets past the 61.8% fib, chances are it's going to complete the triangle. This is the triangle here. So watch the 61.8, which is just below 3,000 on Ethereum. So that's kind of the top 2 here. What I'm going to do is I'm just going to go back here and see if there's any comments or any other, quite honestly, guys, it's not really worth looking at any other coins right now. I mean, we can look at your altcoins. There are some that are fairly strong today. If you want to, we can certainly do that, but really focus just like what we do in the equity markets, we most likely are just going to follow what's happening to the S&P 500. We have the equivalent here with BTC and Ethereum for that. Okay, so I'm just going to look at some of the questions here and see what else you guys have. Duarte, I don't know about alt season or anything. To me, that's very much 2017 thinking, major season and alt season, stuff like that. It's a question of whether or not, if alt season implies smaller caps, right? So implies more risk, implies higher beta assets for things like that. And so you've got to have extra capital to be able to go into something like that. And those typically do better when the bigger assets are already moving in that direction. So when they pick up the wake from the bigger assets, that's typically when alt season. Otherwise, if you look back in the bear market that we had 2018 to 2019, 2020 or so, what would happen is you'd have occasional alts that would boom and then just get whack-a-mole straight back down. And that to me is not really a sustainable thing unless you're able to pick the bottom on those, which is nearly impossible. By the time that most people get in, they're getting whacked down. So it's very, very difficult to go after during a corrective market, to go after alts during that.
Yeah, very much. Right now, I would be protecting my assets. I would be moving into stability and honestly protecting profits if I have them. Because if Doc is correct, and this is going to represent, the shift from 2017 into 2018, the move in 2018, especially like right at January of that year, was to move into stable coins and, sort of those large cap coins like Ethereum and Bitcoin, and maybe some of the ones in the top 10. But honestly, if you had held, small cap altcoins throughout 2018, 2019 into 2020, even when the market boomed in 2020, you still probably wouldn't have had a lot of profit from those altcoins that you had bags of. I still get comments from people, commenting on our videos from, 2018 saying that these are still in the red, these are still not doing well. Yeah, that's because the project died. It's hard for these projects if they just started in the last year to hang on through a bear market. Now, we don't know if we are in a bear market or if this bear market is going to be longer or shorter than the 3 years between 2017 and 2020. But regardless, it was the case that 95% of those alts that started in 2017 did not make it to 2020. And there was a whole new trend of crypto assets going into 2020 that were relevant to the trends at the time. So even those altcoins that held on and were still, there, they had a hard time distinguishing themselves beyond, the trends of the time, like NFTs and DeFi. If they weren't speaking to those things, if they were still doing stuff like, we're doing medical imaging on the blockchain, which was a really popular idea back in 2017, but didn't have a lot of traction, over the last 2 years. That's just how this market evolves. And so you need to be thinking with the perspective that, hey, it's always great to buy alts right before the market rebounds. If you were buying alts like right in March of 2020 or, October, November of 2020 into 2021, when alts just went crazy, hey, you did really well. But that's because we went through a lot of bloodbath getting to that point between 2017 and 2020. At this point, I think it's more about, hey, can I preserve my assets? Can I preserve my wealth? I want to have the perspective that crypto is not about making you rich. It's about making you free. Okay. So you need to keep that perspective first. It's really nice if crypto sets you up for life, but remember that this space, these assets, the best part about them is that you can move in a very liquid sense. But when the liquidity slows down, when we enter periods like this where people are not as open to taking speculation, to going after these sort of crypto assets, you need to be moving into things that are going to help preserve you through these times, so you don't get blown up in your account or you're holding negative 99% loss altcoins, and you want to have that capital to put aside so that you can put stuff that's going to be chasing higher when the market recovers. So all that's to say is, who knows when altcoin season is going to be? I don't think it's right now. And when the market turns around, you'll know it. And that's the time to chase alts. So all that's to say is, hey, take it easy. It's going to be okay. We're going to get through this. There's no such thing as a final alt season. That was the other question. Is like, oh, is this the last chance to get into crypto or watch anything? No, you're not early anymore. That was the first 10 years of crypto, but you're not late either. You're just in time to watch this start to maintain and develop like relevance and adoption in the larger markets. So especially right now where people are uncertain, it's going to be a little bit scary at first, but once that initial wave of uncertainty gets past us, we're going to see a resurgence in crypto. We're going to see, people move back to this, and that's when crypto really shows its worth. So, Doc, what do you think?
We go through this every so often, and we're going through it right now. And one of the big things that we started our service at the end of 2017, beginning of 2018, like perfect timing, right when the market starts to crash right after a moon, of course. And, so we spent most of 2018 helping people like, what do I do? What do I do? I bought in at the highs and now I'm getting destroyed. What do I do? What do I do? And, at that point, it's difficult to give any kind of advice or guidance for things like that. And it was kind of easy for us to say, well, what you should have done is this. And, I hate to do that kind of stuff because it doesn't really help people. And they're like, okay, thanks, Doc, kind of thing. But they did learn for the next time. And everybody goes through a cycle. Everybody has to learn how financial markets operate, regardless of how you guys think they should operate. We're seeing a lot of great comments in the chat today on how people think markets should operate. And people have been arguing about this since the dawn of time in terms of how things should operate. But there's the way that they do operate. So the advice that I would have for you is that figure out, first of all, whether you're an investor or a trader. Investors get a long-term time horizon. They're going to use things like that monthly log chart that I showed you guys at the very beginning. And they're going to say, well, this is just noise. This is just volatility, right? And some people can do that and some people can't do that. Some people are going to look at a drop of $40,000 in the asset price and say, the hell with that. That's not volatility. I'm taking major losses. And in that case, like some of the guidance that Eternal is providing right now is true. Then you probably have a shorter time frame horizon for your assets. Maybe you need that cash right now. Maybe you need to go buy a car or something like that. Well, sell into strength. Learn how to sell into strength. Learn how to buy on weakness, which is the exact opposite that everybody else does. So the sooner you learn to operate the opposite of everybody else, the sooner that you stop getting advice from Reddit, the sooner you stop getting advice from Twitter, probably the better off that you will do, because the only way that you get edge in this market is to operate with a different MO than everybody else does. Otherwise, if you do the same thing as everybody else, you get the same results as everybody else. Yeah. And, yeah, you know, we've seen all the loss porn in Wall Street bets, and, you know, we know exactly what's going on right now.
Yeah. And remind ourselves that, like, for the last 2 years, there have been multiple times where people are saying, like, you know, this market is going up and it doesn't make sense. You know, there's companies posting record profits, you know, like operating as if we're in the 1950s or 60s again in terms of, you know, these margins. And it doesn't make any sense, because if you look at the actual state of things, and, you know, people are losing their jobs, or there's just like supply chain issues, this doesn't make any sense. And now we're taking the opposite perspective of, oh, well, now we have to tighten interest rates because inflation is getting out of control. And, oh, this is, you know, kneecapping all that growth that we just saw over the last 2 years. And look, here's the thing. Markets can say irrational longer than any one person can stay solvent. You need to take the opposite perspective of whatever the market's doing, because, yeah, you might think you're right in your head, but hey, you know, the market's going to prove you wrong 9 times out of 10. So let's operate as smart as possible in this environment, and let's do the best we can to preserve our wealth, and, yeah, move towards something that gets us out of being ball and chain to this crazy market. Because the better you do that, the better you stay irrational, or sorry, not irrational, the less you stay emotional about these things, the better off you're going to be. So, yeah, lots of great comments to chat today, guys. Really appreciate that everybody's just taking a nice, calm approach to this. I know it can be scary if this is your first time going through a flash crash like this, or the first time that you're seeing the market not move in a consistent way. It's, you know, it's crypto, it's volatile. But this is the kind of new game that we have to play, and we just have to be able as best as possible to understand the rules, or, you know, how to play against those rules. And I think that's going to be one of the narratives we have to play by in 2022.
You know, think of it this way. A lot of people are trying to figure out, like, a lot of people say, yeah, I'm a hodler, I'm a long-term investor. And then the price starts dropping by 10K, and all of a sudden they're like, holy shit, what do I do now? Right? So those two attitudes are inconsistent with each other. So what you have to do is you have to find a way to be consistent. So if you truly are a long-term hodler with that, maybe what you do is you put part of your assets into a pile and say, I will never touch these. Or I will only sell these into strength, or I will hold this pile until Bitcoin hits 100,000, or whatever your targets are. Okay, so maybe you take that pile and you manage it in that direction. The other pile, maybe it's a smaller pile, you trade that, you sell it into strength, you buy weakness, you do all the other things that go against this herd psychology of what's happening out there. And you can trade that amount of capital. So there's investing where you basically don't touch it. You're looking to buy on weakness, your dollar cost averaging. That is totally inconsistent with how you trade, where you sell into strength, you buy weakness, and as I always say, you buy assets that are going higher in price. So very, very different. So having a plan like that will mean that you're not nervous. You're not going to be checking your portfolio every 5 minutes on your smartphone, those kind of things. I mean, that's no way to go through this stuff. So when the move came today, it's kind of like, oh, well, here it is. We've been waiting for this thing. So it's just a matter of pressing the right buttons when it happens.
Awesome. Well, I think we're getting to the tail end of our stream today, but for those who tuned in a little after we began, or, you know, are just looking for affirmation as to what's going on here, let's understand that what's the big picture here? What's the big narrative today? Why is it crashing? Well, for one, this is the new sort of thing that we're going to be battling against probably throughout 2022 and onwards. Inflation has become that big, scary word that's going to move markets around like this, either to the positive or in today's case, the negative. But what we have to understand is that this is part of the new sort of way things are going. If you've grown up like Doc has, you've probably only heard one perspective, that inflation is bad. It's this bad thing that, you have to combat against, and it's this, specter of you're always fighting against it. It's always out there. It's what the Fed is trying to limit. But the real reality of things is that inflation helps to move markets, helps to move money around in the economy. And that's what the Fed wants. They want a certain amount of inflation so that money isn't getting hoarded, it's getting spent. That 10% or whatever the inflation rate is going to be is going to make people move money out of their bank accounts and start spending it, or doing something with it, or asking for more of it at their job, et cetera. It's just going to help the economy move. And that's their perspective. We take a different approach where we want to see wealth accumulate over time, a deflationary type of asset, a deflationary type of asset class. These things are naturally, antithetical to each other. And it's as we see the inflation rate become more and more pressing, putting people into these new sort of perspectives, moving them in certain new ways, this is going to be part of what we're continually having to stay a couple steps ahead, how to operate in a sense of investing and trading. And certainly as it relates to how we set ourselves up for the future, how we break out of being chained to the system of constant inflation spikes and the markets reacting to that and all that sort of stuff. So this is something that we'll be talking about more and more throughout this year. Certainly it's something that we're going to be covering in our newsletter. And it's something that I think you have to educate yourself more on, because it's going to drive the markets. So understanding the enemy is half the battle. But it's definitely something that I want to encourage you to not take such an emotional, just gut reaction, inflation's bad or something like that. Learn it, understand it, and then you can start to plan against it, move in ways that counteract it, and be less taken by surprise during days like today, where the market responds to an inflation or interest type event or announcement. And you can say, okay, I've anticipated this. I know what's going on. I understand how to counteract this, how to move against this, how to plan, a year in advance, so that I'm not getting, blindsided by what has been pretty obvious to the people paying attention for a while now. So all this is to say is that it's okay. It's going to be okay. We are here to help. We're here to help guide you and reassure you that, you're not in this alone, that there's a community out there that, will support you through learning all this and more, because this is part of the new sort of narrative. This is what we have to be paying attention to if we want to be conscious, well-informed investors and setting ourselves up to, again, be free, not just rich. So all that's to say is, if you are already a member of this community, thank you. But if you're new here, if you haven't subscribed, if you haven't joined our Discord, we're talking about this stuff all the time. Doc is certainly talking about what's going on in the equities markets over at ReadySet.trade. And all of this is to help put you ahead, start this new year with a new beginning, and certainly try to break you out of, if you're, ball and chain to a job, or you're, not feeling like you're getting ahead in the current system, to help you break out of that, to help use crypto as a tool to, go after what it is you want to be going after, to help you imagine futures, help you, generate wealth, and help you provide hope for, whatever you have ahead of you, rather than the system that seems to constantly push people down and feel as though they can't get ahead. So that's what we're here to help you achieve, to unlock, and be a part of. That's what ReadySetCrypto is here to do in terms of uncomplicating cryptocurrency and making it something that isn't scary. It's certainly, especially when compared to the existing legacy system, crypto's fun. Crypto's something that even during days like today, where things are down and it's fearful in the market, this is an opportunity. This is when wealth is built. People taking advantage of times like these to say, I'm not going to let these overwhelming fears and doubts and uncertainty dictate how I see this market and where I see opportunity. I'm going to start planning ahead. I'm going to start using this as a time to educate myself, to make smart investments, and start putting myself ahead of the curve, so that the investing herd isn't dictating how I get ahead in my life. I am. So if that's at all interesting to what you're wanting to do, especially in 2022, which I'm saying is a year of new beginnings, even if the market isn't going to reflect that, let's do this together. Certainly we've been talking a little bit about how we've had like a holiday sale on all of our classes and our membership. And we frankly have extended that just into this week. Probably the last chance you have to take some really good discounts on some of our courses in terms of how to learn crypto, how to trade it with Doc, how to start outsmarting the market with our friend Checkmate, all this stuff. So get ahead in this year. That's, I would say, if nothing else, take today's market move as an opportunity to say, hey, let's be serious about this New Year's resolution stuff. Let's actually commit to it. And let's learn to be a better trader or investor and be more informed in these markets that clearly seem like they're, uncertain, but really for those who take the time to educate themselves, it's not so scary. It's not so uncertain. It's something that you can plan and educate yourself around. So Doc, what do you have to say?
Well, all I pray for is movement is opportunity, right? So when things start to move, the structure unveils itself, and basically learning how to read that herd psychology is a skill that you learn for life. I mean, it doesn't matter what market that you trade it in. You can trade it in the equities market. What we teach here works in the equities market. This is what I learned in the equities market, and it works just as well in the crypto market. So herd psychology is going to happen, and the biggest difference here is it's global, and it never shuts off. It's 24 hours a day. And we've just had a move here of about 1,000 points in BTC just in the time that Mav was talking. So yeah, we are seeing a little bit of volume and capitulation coming in. So there is hope that, now that we've tested that 42,500 level, that maybe we'll see a little bit of a bounce here. But remember rule number 2 of fractal energy trading, that reversals start from the inside out. They start with the smaller time frames and they propagate higher. So learn to read those smaller time frames, learn to read the price action, understand what's happening to the price, and don't be a victim of the volatility. Thanks, everybody.
Take care, guys. Welcome
Appreciate
to the new year.
Hanging out with us, and you guys have a great day. We'll be back online in our Discord and everything else like that for those that are part of that. Otherwise, we'll see you guys next week. Take care, everybody. We'll see you around. Be good.
See you guys.